Nike just reported its financial results after the markets closed on March 20th, 2025, in what was perhaps one of the worst quarters I've seen from a company with the quality performance of Nike's history over all of the previous decades. To see a couple of quarters like the kind that Nike has reported is not very common. I'm glad I told investors not to buy this stock a couple of months ago and then reminded investors again about a month ago not to buy this stock at those higher prices. Nike stock price is down over 6% in the aftermarket hours after delivering these dismal results. So I'm going to review Nike's figures in all the ways that it is not very good for investors, and then update my recommendation of Nike stock and see if at this lower price, if it makes sense to buy the dip here. So let's get into it. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Nike reporting declines across the board. Third quarter revenue was down 9% to $11.3 billion. Nike direct revenue was down 12% to $4.7 billion, and wholesale revenue was down 7% to $6.2 billion. In a category that was holding up relatively well up until this current quarter is the gross margin. It had been doing well even though sales growth was falling backwards. Now its gross margin also decreased by 330 basis points to 41.5%. So this is the consequence of a major strategy shift that the previous CEO undertook at Nike, and ultimately it cost that previous CEO his job, and that was to focus more so on the Nike direct business to deprioritize wholesalers, and that strategy did not work. It left an opening for competitors to go in there, partner with wholesalers, and take sales revenue from customers that were visiting these locations and seeing that there was limited Nike inventory available. So they chose whatever was available at that location. And that strategy has backfired significantly. The current CEO, Elliott Hill, saying that the progress we made against the Win Now strategic priorities they committed to 90 days ago reinforces my confidence that we are on the right path. I don't know what he sees here that reinforces his confidence that they're on the right path. Sales are falling by double digits, margins are falling, and that's after the fact that they spent more money on advertising and promotions and incentives, and still sales declined. I don't know what he's seeing that was not reported here in the financial statements, but if there was something that the CEO saw that gives him that confidence, it should have been more clearly demonstrated in the company's financial statement to investors so that investors can feel that same confidence, because I'm not feeling that confidence that the CEO is feeling after reviewing Nike's results. So I mentioned that the company's margins fell, and they described that as due to giving higher discounts, higher inventory obsolescence, meaning that they had product that was so undesirable that they couldn't even sell it. They had to mark them down considerably. And then they had higher product costs and changes in channel mix. What this means is more wholesale business than is usual in their proportion. And then that was partially offset by some of those big restructuring charges they had in the same quarter the prior year to help restructure this business, put it into better balance. Furthermore, to make matters worse, Nike's demand creation expense was $1.1 billion, and that was up 8%, primarily due to an increase in brand marketing expense. So not only did sales fall by double digits, but they fell by double digits even though they increased advertising spending, increased brand marketing expense. That's a really bad sign. That's a sign that the company is not having that same reaction from consumers that they're used to having when they have these promotions and when they have these marketing campaigns. They're used to having a nice response from consumers that go out and purchase its products. That's not happening right now. There's a disconnect between Nike's ability to generate interest from its customers, and that's troubling. That's troubling for sure. Nike's diluted earnings per share came in at 54 cents, which is a decrease of 30% from the same quarter last year. And surprisingly, the company's struggles are worldwide. You look at North America, total revenue was down 4%. You look at Europe, Middle East, and Africa, total revenue was down 10%. You look at Greater China region, total revenue was down 17%. You look at Asia Pacific and Latin America, total revenue was down 11%. So a clear disconnection between Nike and its customers worldwide. Its revenues are down across the board. And that's really, really concerning for me. Now, even after the stock price drop in the aftermarket hours, it's trading at about $68 a share. My market price here, the current market price, this updates during regular market hours automatically. It doesn't update in the aftermarket hours. So despite that fact, the intrinsic value I had calculated for Nike stock was $60 a share. That's why a month ago, when I looked at Nike stock on February 14th, I told investors that this stock was not a buy at those prices. I rated it as a hold, not a buy. And so even after this stock price decline, the current market price is still above the intrinsic value per share I've calculated for Nike. And then looking at the forward price to earnings ratio at 31, it's the lowest it's been all year. But I think Nike stock should be selling at a lower valuation given its very poor performance in this most recent quarter. So Nike is a company that I would really like to own. The brand equity is really strong, even through these near-term headwinds. I think they can course correct given enough time. But I also think that there is more downside here, that the stock is still, it's trading at a little bit above what it should be trading at. I'd love to get this stock at a price with the 5 in front of it. Something in the $50 range, $55 range would be a great price to buy Nike stock. Anything with a 6 in front of it, I would be hesitant to pay for Nike stock unless I see some major improvement, which we're not going to see for another 3 months when the company next reports financials. So to update my recommendation for Nike stock, I would not be buying it at current prices, but I also don't think it's in such dire situations where I would dump it if I owned it. So this is a hold for me if I owned it already. If I didn't own it, which is my case, I don't already own it, I would be looking to buy here in the 50s, $55 range for Nike right now. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.